I'm not getting any feed.
I
I'm not,
must
I'm
be
not
on
hearing
mute.
anything.
See, technical issues. Technical
There
issues
we
to
go.
start
I was
off
There
like,
with.
we go.
That's what I'm talking about. I was on mute. I was on mute. That's messed up. Sorry, folks. Welcome to this week's edition of Black Box Beat. It seemed like it's been so long, but at the same time, it hasn't. It's only been a week, so we're glad to be with you guys. Let's get this party started. I'm Kang.
I'm Maria.
And I'm Hells. All right, let's get in some chat room
So
chatter.
let's get right
What
on
has been
into
kind
it.
of in the conversation?
What's going on out here on the what's going on out here in the community? What is everybody talking about?
Well, King, I think it goes back to kind of last week coming into this. It's like everybody was looking at that CPI print saying, okay, so how are we going to come in? What's the number going to be? What are we looking at? The battle over the last year and a half, whatever we want to call it, has been inflation, interest rates. It's like, so how would the number print? Will we continue the downward trajectory? The answer is yes. I think core came in a little bit higher, if I'm remembering correctly, just a wee bit. But it was something from the standpoint overall, the market seemed to embrace it within the moment. Sometimes moments in life are fleeting. And we kind of saw that with some additional commentary from the Fed. That effectively, once again, it was just a word salad of shenanigans as far as handing us it be like, no, this way, that way. It's fine. It's not fine. Recession, not recession, not recession. It's just, again, they continue to throw these like whirly curveballs at us. And we're just like, okay, so what do? We front ran the number, right? CPI, we front ran it. Everybody can say that. So now what? Here we are with a nice little red day.
Well,
It's actually really
what I,
interesting,
I,
right?
I
Sorry, go ahead.
oh, go ahead,
You're good.
go ahead, Maureen.
I was just gonna say I was actually super surprised when I woke up this morning and saw that future, at least Nasdaq was up over 100 points, and I was actually surprised that it didn't immediately fade at the open. So definitely an interesting open.
I was gonna say too is funny the narrative today. So I agree with you, Hells. It was all about the Fed and word salad. I mean, it was like this morning. It was so funny because it was like so we open up and it's like puts are screwed, and then midday it was like calls are screwed, and then later on in the afternoon it was like puts are screwed again, and then toward the close it was like all calls are screwed. So it was crazy, man. And we had some kind of hawkish Fed speak in the morning, and then Daly came out and she was kind of saying no recession, and then all of a sudden here come the Fed minutes, and they're talking about likely seeing a recession in the back half of 23. And yeah, we were just all over the place, and still have more data to come this week.
Yeah, and then with PPI, we get jobs data, we get retail sales at the end of the week. Once again, it is they continue to set the stage. So again, we ran the number. There's no doubt we ran off of pure technicals, no narrative involved at all, because the narrative isn't all that grand, right? It's like you had semis going up because Samsung is like, okay, we're cutting our chips, and so you get semis like raging, and then it's like, so semi sold down the last 2 days after that. There's just a lot of mixed messaging going on throughout the market. And if you get too much of that at these levels, you make people insecure with with the positioning and where they are. And I think today is a day that we're just like, y'all don't know what the hell you're talking about. You don't know what the hell we're doing or where we're going. So all else fails, hit sell. When they've been buying every single dip for the last month, this is what you get.
Yeah, but have they bought enough is the question, right? So that thought still lingers in the back of my mind. I know we've talked about it in the past. I think last week's show we actually might have mentioned it a little bit. I agree. I mean, could we pull back? We could. Absolutely, we could pull back. No real narrative to run off of. I totally agree with that. But at the same time, we have to wonder, our smart money players have been on the sideline for quite a while. And I'm curious to see how much they've actually bought. Are we still in a position where they don't have a choice but to buy? Doesn't matter what's going on, they're going to buy it because they literally do not have a choice? Or are we going to go back to a more data driven type of environment?
To be fair, if they've been holding cash since October, can we really call them smart money? Can we really, it's like, just to be fair, it's like, can we really say that they're smart if they sat there and watched the market run 600 points and they're just like, oh no, we're not gonna, no, we just can't. That's not smart money. It really, really isn't.
I know.
Well, I was just going to say in light of the recent run that we've had and that continued push. I mean, we weren't seeing any kind of like continuation through the downside on any kind of breaks or whatsoever. That continued BTFD in the name of like in the face of all those macro numbers. I made myself a glass of Kool-Aid, because I feel like the market has been drinking the Kool-Aid
I'm not
the
hedging.
whole
Where's
time
our
in the
Kool-Aid?
face of what's going
But
on.
where's
Yeah,
ours?
so I made some Kool-Aid,
But where's
because I
ours?
was like, I was prepared to drink it right along with the market, and today maybe we got a dose of reality. But here's to y'all.
Yeah,
I think I'm
it's like the
upset you
dose of
didn't
reality.
send us that.
The idea of the dose of reality and kind of where we are and where we're sitting, it just becomes so interesting when you start pairing everything together. It's like if you take the time to sort through consumer credit, and the debt that they brought on, you take the time to sort through, where the consumer is as far as their overall savings. You have inflation to where it's like they are still saying that it is sticky. And then you have energy costs going up. It's like the environment is not really set up all that well for the consumer in general. And if we're still a consumer based economy, there's a lot more questions and answers that continue to be there. Look, we've had an incredible run. And I think Kang and I both can say that we're not about to sit here and like leverage money to step out in front of this freight train and try to get short. I think we both kind of learned our lesson, getting kicked in the face, head and neck, trying to go ahead and call some type of a top. But again, where are we and what are we doing? Maybe the flow will answer it.
Don't worry though,
You
Hells. I'm
know,
gonna get that T-shirt printed up for you though, man. That
You're not
3,500
dressing me,
T-shirt. I'm
dude.
gonna get that printed up for you.
You're not dressing me. You're not dressing me. It's not going to happen. Maria, she might be. I might give it to her. She could. You're not
what if I
ever.
design it for you? I'll design it. He'll print it. He'll have it printed. I'll design it.
That's what I'm talking about.
And
Yeah,
vice
yeah,
versa. If he loses, I'll design the shirt for you, Hellsbells, for Kang to wear.
yeah, yeah. Because
I'm going
gotta
to have
wear
to
it
think
on
about doing
air.
something.
Gotta wear it on
Yeah,
air in
I'm
a future episode when we hit that number.
I voted for
definitely going to
burpees.
still
Y'all
think.
came up with the t-shirt idea. You could have done 10 quick burpees and been done with it. But now we got to get t-shirts printed.
There you go.
I
There you
think that's
go.
better than a
And I
burpee.
just
I don't
say
even know what a
too.
burpee is.
I
It
just
sounds
say
pretty ridiculous.
from a
I'll
technical
send you a video.
perspective going forward, y'all look at the from a technical perspective, keep an eye on that 4130, which we briefly tried to get up to today. Keep an eye on that 4130 and to the downside 4070. So we haven't really broke, even with all this drama today, we haven't broke out of that bullish, flag just yet on the daily. But those are the two areas that I'm watching, that 4070 down there to the downside, and then 4130. And I don't know about y'all, but I will definitely be glad to get out of this range.
Yes. I agree
Yeah.
1,000%. My levels line up exactly with yours, within maybe a point or two, same areas. So yeah, definitely watching the same areas.
There are definitely a lot of interesting charts and the levels that we just hit and kind of, let's just say we rejected, put that in quotation marks because tomorrow's a new day. Anything can happen. Apple did have a MACD cross down on the daily, and you can kind of see, maybe kind of sort of, if you squint your eyes real hard, that could be a Head and Shoulders. Apple is the market at the end of the day, and they're cut in PC shipments. Maybe that says something about where we're headed.
I agree. I agree. Definitely some things out there on the horizon. Let's get right on into where that money is flowing. So let's talk about that, folks. What are y'all seeing out there in the flow?
So at least for myself, I think we're still going to have to be really, really careful with the flow that we are following, only because we have ER starting at the end of the week, and shortly after we've got our big tech ER starting. The big bulk of them. What we did see is just a little bit of flow going into Marvell, although, and I know Hellsbells has mentioned it, the semis have cooled off quite a bit. But yesterday, the 10th, we saw some nice flow come into Marvell. They bought the June $40 calls. And if you look at that OI chart, you'll see that the OI still looks good on that chart, which should be coming up next. You'll also see that they bought it at a decent spot too. So if you'll look at that chart, decent spot that they're buying that at. OI still looks healthy. These are out to June. I like these. But again, my expectation for flow overall is that it's going to be at the least messy into ER. What I will be interested in watching is what kind of post ER flow we get as our large companies report.
Yeah, no, I'm with you there. It's like flow has been really interesting. It's like there's things that are counter narrative. We saw incredible flow come into cat, and it's just like if we're going to go into a global recession, why are we buying cat? Why are we pounding money in there? It's like semis are interesting. What I like about Marvell is like you take Marvell chart, you put it in next to Nvidia. One of these are not the same, right? It's like one is sitting there banging the top side, and then you go to Marvell, it's sitting there trying to grip the bottom. That's one of those that you can see. Okay, so maybe that's a lag. Maybe they pull Nvidia, pull AMD, and they can still maintain, you know, um, presence within the semi space as far as being within Marvell. Very interesting stuff. Banks reporting Friday. That flow is every which way. So you really
right?
can't get out. It really, really is. I do have WM flow continues to be weak, even though we saw some decent lines come in today. Really interesting time within the market and looking at flow, no doubt.
Yep.
So moving right along, this is the interesting setup here. The interesting part of our broadcast. It is the game we all like to play, folks, every week. Are you going to shag it? Are you going to marry it? Or are you going to kill it? Always sounds very interesting. So just know, folks, when we're talking about shagging, we're talking about scalping up or down, and generally that means a pretty short time frame, usually less than a month. Marry means that we're walking down the aisle. We're ready to, put the ring on it, watch Lifetime movies with it, everything, buy it some candy. We're going to be with that for more than a month. And killing is where we're going to exit the position or that we're just not going to touch it altogether. So now that you know the ground rules, let's get right on into it. Hells, what you got?
All right, so Shopify, this is mine. I'm looking to shag it to the downside. If you look, it came up and it filled a gap on the daily today, but lo and behold, it made a gap in order to fill the gap. So I'm going to go ahead and play that to the downside on Shop. I entered puts today going out the next week, the 144s. I say tread lightly. These contracts are already up over 50%. That I got in today. So this is going to be one of those that I'll probably,
Woo-hoo.
if we get a red open tomorrow, I'll look to go ahead and get out of the position, capitalize on the
Mm.
juice and go from there. But it was one of those that I was looking at. I was like, again, none of this makes sense to me in any capacity with lending being bad for smaller and mid-sized businesses. That is a big piece of their pie. The consumer is also shagging it to the downside.
I like that idea, Hells. Although it's not one that I trade a lot, just kind of knowing what makes them tick. I like it too. So I'm rolling with you on that one. I like shop and a shag to the downside. That sounds appetizing.
Thank you,
I'm gonna
sir.
roll with you, Hells. I'll roll with you too.
What?
We're gonna shag.
I got Mario on the squad also. I'm invincible if Mario is on the squad too. This is great.
You know what's
This is
funny though
great.
is in the short term, it's a shag for me, but I actually like shop long for longer term. But for the
I do
short
too.
term, I'm gonna roll with you. We can also
It's a very
capitalize on
short.
those in between moves. Yeah, I like it. I'm good. I am going to marry Cat. So, Hells, you actually mentioned it earlier today. Check out that chart. You'll see that they bought a large amount of calls. When was that? Yesterday? I believe yesterday.
Mhm.
Right off the 200 or, slightly above the 200. Great area of support. We are in the, what are we in? We are in, I know what we're in. Hold on. We are in the August 260 calls. You'll see OI that you see the volume that translates then into OI. Did they close? Did they hold the whole position open? No, they didn't. Does that make me feel warm and fuzzy? Not necessarily. However, I love that Cat is a more defensive play. And it can also be one of those ones that can help kind of stabilize a long portfolio. So Cat right now is a Mary for me.
Oh man, it's such a tough one. It's like I I can't ride with you on this one, Mari. I'm sorry. It's like I can't get my head around
That's okay.
how interest rates being higher, credit being more difficult to come by. It's not as if these are like little $50 gadgets that people are able to just pick up. I think that there could be some pressure on Cat via earnings. I don't know how long you're going to be in it, but I would not want to hold Cat long through earnings for any period of time, based on some of this that I don't want to say hearing, but the picture isn't pretty.
Understood. Absolutely understood. And I actually haven't decided whether I'm going to hold through earnings. They do have earnings coming up. I haven't fully decided if I actually want to hold through. I've got probably about 4 or 5 days before I have to make that decision, at least. But it is something that I more than likely will close out ahead of ER, even though I have till August.
Smart.
Mario, if I remember correctly, wasn't Cat, although I think it might not be the same CEO, wasn't they the one that did the
It
infamous
was
high
the high
watermark?
watermark. You
Oh, that
remember
was
that?
infamous.
That was
So hopefully they
crazy.
don't pull that shenanigans again.
Just don't. Oh, that guy's not there anymore, right? I don't think it's the same CEO,
I don't think so.
or
I'm
is
not.
it?
I'm not wishing that on you, by the way. I'm just saying that was when
Please
you said
don't.
cat, that made me think about it. Like that dude was crazy. Uh,
That's like
I'm
the
with
first
Hells
thing that
though.
comes to mind. High watermark.
Yeah, I'm with. Excuse me. I'm with Hells though. I think with that possibility of a credit crunch, people pulling back on like capex and things like that. It looks like a deteriorating macro environment, so this would be one that they might pull back on. And plus, if you have pressure on like commercial real estate or construction, then this might be one that kind of gets pulled back with it. So I wouldn't, for me personally, it would be one that I'm gonna pass on.
All right.
For me,
No,
it's
she's
going to
gonna
be
make like
cash. I'll be quick on
$1 trillion
this
off this
one.
trade.
I'm sticking with cash through this. It's just going to be cash for me, just because, like I said, I like to put out longer term stuff on here, and that 41 30 to 40/70 area, we're just kind of stuck in that range. So I want to see when we're going to get out of that. I mean, it's short term scalps anywhere in that range, but for me, it's just going to be cash at the moment.
I can't disagree. I want to beat you over the head and neck for being saying all cash, but it's like I can't I can't fault you for it. When you get a word salad from the Fed, when you get conflicting flow just depending on the day that either jives with the narrative or goes against the narrative, or the things like semis be like, no, it's good that we're cutting production somehow, some way. It's like, again, these are things for me that I look at. It's like, why not? It's an environment that's very, very difficult to be in and swing with. So can't beat you like I want to.
Hey,
Um,
let's save that for
you know
after
what I've
hours,
always
brother.
said, right?
Let's save that one for after hours. Let's get right on into the viewer question. What we got?
So this question is from Go Stop and Mrs. Green. Most of my positions are long, and sometimes I think I should hedge. Should I be concerned if I have too many open long positions? So, and this is, and Kang's going to talk about this too, about this concept where hedging is to be used as insurance. If you're going to hedge, you got to use it just like you would treat your car insurance or your health insurance. You pay for it whether you use it or not. And the idea is that you ultimately don't want to have to use it, right? So before you put on a hedge, you've got to be willing to lose the amount that you're paying for that. And I think that it's a really tricky concept for traders because most people, they buy puts and then they're looking to profit off of those puts. If you're truly hedging, you want those puts to expire zero because you actually want to not have to use them, right? Because they're there again as insurance. So I think that you can always look to hedge. And I know that these guys are going to say the same thing. If you are getting worried that you're too long, chances are you do have too many positions open. Go ahead and start closing some of those out.
I
I don't know
agree.
that I can add
It's got to be
anything to
used as
that.
insurance. Got to be used as insurance. You shouldn't be putting on hedges to profit off of those. And I know that probably sounds counterintuitive, but hedges are just that. They're just like auto insurance, like Mario was saying. And so I think that there's this misconception. We see people talking. I see it all the time, and they're like, should I hedge? Should I hedge?" And it's like, but they're putting on. They have a short dated position, and they're just looking to put on something that's going in the opposite direction. So if they're short, dated calls, they're just trying to say, should I hedge in case I catch, a couple of points to the downside? And that's not what I think a hedge really should be. When you're thinking of hedging, it should be just like cost of doing business, right? Just like your auto insurance is. So if you have a longer dated call position on something, let's just say, and you want to put on, a small amount of protection just in case something does happen to where you're, quote unquote hedged, then that would be something, like shorter dated puts in that case, then that would be something to do. But I think that, you, like Mario was saying, you should look for them to go to zero, right? It should not be a large position.
Yeah. And again, it's like make sure that whatever you're hedging is actually worth it. It's like you don't need, full comprehensive coverage on a jalopy. You really, really don't. It's like
Right.
it's like just make sure that you know that it's worth it. It's like, would it make sense to take some off? Would it make sense to reposition? Would it make sense to maybe sell calls or against it, whatever it may be, whatever you're trying to hedge against? Just make sure that you know what you're doing, and you don't. If it is a true hedge, your hedge doesn't need to be a larger position than the thing that you're trying to cover out. That's a great way to get kicked in the face. So just kind of know what you're doing a little bit and know what you have and whether it's even worth hedging.
So, Hells, you're saying I should not buy full coverage on my 1990 Geo Metro?
1990. I know that we're getting into antiques, man. We're getting into classics. The 1990 isn't? Aren't we close? 30 something years.
I don't know, man.
Can
Some
you?
things are just, no matter how old they are, they're still a POS.
Yeah, yeah, we can both agree on that. We can definitely agree on that. Man, you put together some really nice cars. I don't know if anybody knows this, but Kang really, really does a great job putting together older cars, restoring them, making them look nice and pretty. It's good stuff, man. Really, really enjoy looking at
Hey,
that.
appreciate it. Appreciate it, brother. Appreciate it. Appreciate it, brother. Um, Speaking of, yeah, let's get right on into the loser learning moment. This week, yeah,
He was like, yeah.
this one belongs to me. Yeah. It's SPX, man. It's like I said, it's with this Kool-Aid, the market drinking this Kool-Aid, and it's just been going up, 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 up. And I mean, look, I think to a certain extent we can all agree that this is, we can play both sides, right? Everybody capitalizes on both sides, but at a certain point, things just get long in the tooth. And so, even on some of the downside breaks that I was looking at, we just weren't really getting any kind of follow through whatsoever. Nobody can see the future. So, you just put on the trade. I always hear Mario in my head talking about managing risk, and you watch your sizing. And then, of course, you trade accordingly and have your stop. Well, here in the middle of this chart, this is one of my losers. I put on a short as we started to break this trend that I had right there in the center of the chart around 4011. Looking for a short down to 4100 or right in that vicinity. And man, or at least right to, VWAP down there. And it started to break and did not continue. And so what happened? BTFD. And so it's just one of those things. Just put on your trade and you size accordingly, and sometimes it works, and sometimes it doesn't.
Yeah, I'm not going to let you go ahead and be solo. You and I put shorts basically on the market. I went short the Q, you went short SVX, and we both got absolutely destroyed. We got kicked head, neck, face, whatever. It's like they were buying those dips before anybody even had a chance to hit sell. It was a technical move that was being made in order to run the market. I think ultimately into this level and to test that the numbers that you were talking about over there on SPX earlier in the show that Mario agreed with. It's like it was a technical executed deal to where they were going to buy, they were going to put money. Didn't matter the news, didn't matter the head, didn't matter what it was. I was convinced during that run, Kang, just to let you off the hook a little bit, that bombs could have gone off.
What?
And werewolves could have been running everywhere, and SPX would be sitting at 5,000. It'd be like, oh, that's a great reason to buy the dip. This is amazing. We'll get interest rate cuts for sure now. So yeah, man,
it's like everything. Let's buy the dip on everything, man. It was so crazy. It was so crazy. But I hear the music, and we all know what that means, folks. That means we have made it to the end of the show for this week. So glad that you checked us out. Please make sure that on the YouTube channel that you like and subscribe and get those alerts so that you know when we're going live. And as always, folks, it'll be every Wednesday, 4:10 p.m. And we hope that you stay green out there. So until next time, everybody, peace.
Bye, guys.
Bye, everyone.
Okay.